Good morning. Welcome back to another stream. So in this video, I'm going to be discussing a basic intro into investing first for people who, are beginners. And then I'm going to go into what halal investing is. And then we're going to start to dive into some basics when it comes to investment portfolios and asset management. So if this is gibberish to you, that's totally okay. This is the whole purpose of the video, is to just give you a better understanding about investing. But before we dive in, some very, very important disclaimers. I am not a financial advisor or expert, so don't take anything that I say as financial advice. Always consult a financial expert and professional, like a financial planner. So now, I guess a bit about my background and my intent behind this video. Take this purely as entertainment purposes, edutainment, as I say. So I have been learning about finance for probably almost 2 decades, like quite a while. I have done a course in financial planning, but I don't have a qualification. But I just love numbers. One of my math majors in university is pure mathematics. So my background is actually in teaching. So I would say one of my superpowers is helping break down more complex concepts into some simpler terms. So that's my intent with this video, is to demystify this world of investing so that when you do talk to a financial advisor or planner, you're not going in completely blind, which actually puts you at risk to be taken advantage of, because unfortunately there's obviously a lot of scammers in that financial space, as there is in a lot of other spaces. So take this as to empower yourself when it comes to finances. So when you do talk to someone, before you take any action when it comes to obviously your hard-earned money, you'll be much more informed. You probably be able to ask them more intelligent questions. So I'm going to share my screen. So I'm going to take some notes along the way. Feel free to ask any questions in the comments, and I'll do my best to respond. Okay, so let's share my screen. Okay, let me get rid of this. Okay, so let's now talk about just some basic concepts when it comes to investing. Like, what does investing even mean? So the way I think of investing is it's essentially putting money towards an asset, which then brings us to what is an asset. So I'll just write that down. So investing is putting money into an asset. So then what is an asset? So this is really important. So if you ask a bank and you want to get a loan out of a bank, they will say asset is your house, your belongings, your car. But when it comes to investing, an asset is something that grows in value or has the potential to grow in value, and ultimately is something that gives you income. So it grows in value and is income producing, is kind of like a basic idea of what an asset is. So if we measure and look at the idea of a car, like, would you consider it an asset? So the bank will consider it an asset because if you don't pay your loan, they can take it and sell it and then make some money back. But in terms of investing, if I buy a car, am I going to be making money from that car? As in, like, if I were to sell the car in 2 years' time, will I have made money from that sale? Generally, the answer is no, unless it's like a very rare car. Like I think I heard Aston Martins are like, sometimes an investment, or like vintage cars perhaps. So I guess things that are more rare, like, collectibles, that can be considered an asset. Because the idea is if I invest in it, then maybe down the track when I'm ready to retire, I should hopefully make some money. But obviously, with assets, it's not like it just constantly goes up and up. Like that's just not how investing works, or certainly just it'll go up and down, and it might be because of just factors in what's going around in the world, etc., etc. So that's the first thing, is investing is ultimately putting your money in towards an asset, and then it's only an asset if it is growing in value or has the potential to grow in value. It's like a business is something that you might invest in and that has potential to grow. But then obviously one business is not the same as every business. Some might not be struggling versus some might be actually thriving. So they're firstly very basic ideas of when it comes to what is investing. So then the next question is why? Like, why should you invest? Especially, like I just said, sometimes investments don't work out. Sometimes a business completely collapses and it's gone. Just even with just if you think of whatever, just around us, like think of businesses that people thought would always stay around and suddenly they disappear because of even like world events, for example, COVID. I mean, how many businesses shut because of COVID? So then it brings us to that question of like, why would I even take the risk? Like, why invest? And ultimately, the biggest reason that I have learned from just all my different learnings for the past number of decades is it's to like, what's the right word? It's because of inflation. So, which then brings us to the next concept, like what is inflation? So I think we certainly understand inflation in our daily life and how it affects us. For example, before COVID, how much was petrol prices? And then after COVID, how much were petrol prices? Even food, before COVID, how much was the cost of milk and just our, staples? And then after COVID, what happened to those prices? Like how much are people struggling right now? So that is what inflation is. It is the gradual decrease in value of money. So again, this is just very basic. If you look up online, what is the definition of inflation, you'll get a much more complex answer. But I'm trying to really break down these concepts for you in very, I guess, layman's terms and just practical terms. So essentially, inflation is, in a practical sense, is that gradual yearly, decrease in the value of our, the spending power of our money. So decrease in power of money, money's value, or spending power. Let's put that in, spending power. Spending, apologies, my spelling. Okay, spending power. So let's now talk back about why would we invest. So for example, let's say you have a choice of just keeping your money in the bank. So as a Muslim, generally Muslims try to avoid interest because we just believe that while there's good in interest, the harms of interest are a lot greater. And I think certainly the developing countries would be an example of, that in terms of how they suffer because of interest to the first kind of quote unquote first world countries. So, but let's say, you had your money in the bank and it's earning interest. I don't know what current interest rates are, but let's just say interest that you're making from your money, let's say it's 2%. But then inflation has been really high, meaning what you could buy with your money with $10 5 years ago is not the same as what you can buy with $10 today. So that is inflation in practice. And there's a percent that it generally increases a year. So let's just say the inflation rate is, let's just make it 7%. So we're making money by keeping our cash in the bank, and the bank is giving us 2%. So that means in $100, after a year, I now have $102. But inflation is eating our money, and by the end of the year, the actual power, the spending power of our money is 7% less. So if we actually subtract them from each other, so essentially it is, 2, which is what our money is growing by, but its inflation is a negative, so -7. So in the very end, we are actually losing 5%. So even though it looks like we have $102, but when you try to spend that $102, you can't buy the same amount as what you could a year ago, by say $5-ish, because it's 5%. So that is the reason why people even consider investing, or certain people who learn about investing. It's essentially to beat inflation. It's to cushion them, to, I guess, overcome the effect of inflation on their wealth. And especially as a Muslim, because we don't believe in interest anyway. So, Muslims will actually take that money out and kind of cleanse their wealth of it by donating it to, that's a whole other story. So we won't go and get into that. I don't want to get sidetracked. But let's now look at the potential of investing and how that can help us with inflation. So let's just say there's a particular investment. This is not all investments, of course, but a 10% return would be a really, really good investment. And again, we're looking at, this is over a very long period. So there are investments that can get you even more, but usually they're more volatile. There'll be investments that'll be a bit less, but let's just for the sake of understanding the concept, let's understand what happens if I invest compared to inflation. It's the same idea. So we are investing in a company, but then inflation is the same as 7%. So if we actually subtract those from each other, so it's a +10 this time because that's the gain, but it's a -7 because that's the loss in our money's power. So we're actually in the green, as people sort of talk about, sort of in that money world. We are actually +3%. So what that means is in a year's time, the value of our money has actually grown, even in spite of inflation. So that is why people invest. It's ultimately, besides just obviously, looking after their future, and especially when they no longer can work in retirement, but just on a yearly basis, especially for Muslims who, don't believe in interest, it is to guard against inflation and to still have at least the same amount of spending power as when we first put the money into that investment. So that is the why we invest. So now I want to talk about some terms that you'll hear when it comes to investing. So the first one is share, or sometimes if you're American, you would understand this as a stock. So to explain what this is, let's look at the example of a really, really successful business. So example would be, say, for example, Apple's. I actually worked for Apple for over 8 years. So I know, systems wise, they really know what they're doing. And so ultimately they are a profitable company. They're one of the few companies that, I don't know if they're still at this valuation, but at one stage they're $1 trillion company. $1 billion is already a lot, but to reach trillion. So that kind of gives you an idea of, okay, just how successful they are. So let's say you have a really successful business. Wouldn't you love to own that business? So wouldn't you love to actually be an owner of a company that is every single year proven to make money and then grow and expand? So the thing is, the value of Apple is like a trillion-ish, more than $1 trillion. So buying that company is obviously impossible for everyone. However, that is what shares and stocks allows. It allows you to be a part owner of a company. So again, this is breaking this down into just the basic concept of what a share or a stock is. So essentially it is part ownership in a company. So if you are a part owner, so as for how much power do you have in this company, it depends on how many shares or stocks you have. So again, I'm simplifying here. So let's say there's the company is broken up into 100 shares, and I buy 50 shares. So that means I own 50% of the company. But obviously that's not the case with Apple. We can check later actually what the number of shares is. Like it'll be like probably millions of shares. I'm not sure. They keep splitting them as well, which is a whole other story. So depending on how many shares you have, that is actually your percent ownership in that company. So that's the basic idea of what a share or stock is. Because I know people like, you watch the movies and you see them screaming, buy, 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 sell, sell, sell. You have no idea what's going on, but that's what people think about with shares. I know that was certainly me. I was always like, what is that? But again, that's like a story for another day. So let's now think about the actual profits of the company, which brings us to another concept when it comes to investing. So profits, so obviously, profit is the costs to make the Apple products, to pay the staff, to pay rent, in maintenance of the stores. So those are all the costs. But then revenue, that is, of course, the money coming in. So, the cost of an iPhone, which is like 2,000 or something. So all those iPhones being sold. So that's revenue. So profit is the difference. It's the difference between the money coming in, taking away all the expenses. So obviously Apple, pretty successful company, so they make a lot of profit. So if I'm a part owner, obviously I want some of that profit. Like, I've put my hard-earned money into it. It's a risk. The company could go down. So I would love to have a little piece of that profit. So that is what a dividend is. It is essentially, it is part of, or let's say portion, like a portion of business profits paid to shareholders. So it's not all of the profits, because then the company won't be able to grow. So let's say, Apple makes millions of dollars in profit and they just gave it to everyone who is an owner, then the company will just stay as it is. So some of the profits, they'll invest in maybe new products and new stores, and because obviously those have costs. However, a portion of it to reward shareholders, reward these investors who took a risk with them, they get paid those in dividends. And so typically dividends are paid twice a year. So this is a great way of making passive money, basically. So every year, whatever the company makes as a profit. So obviously if the company struggled in that year, like in COVID times, Apple also struggled. So then it means that dividend's going to be a lot less. And maybe even if it's a really struggling, it might not be anything at all. But typically, if it's a good company, then you will get that kind of nice cash coming to you every year, and typically twice a year. So that is what a dividend is. So let's now talk about, so that's businesses. We've talked about that. So the idea of a stock or a share in, businesses. So let's actually talk about property. So that's another very popular investment. So the thing about property is it's not very cheap these days, certainly not right now. The market in WA is pretty inflated. I mean, first of all, you'll need to save a deposit, which will be tens of thousands of dollars. You'll also need to, get a loan. So really the value of the property is, I mean, you'll be lucky. You'll probably get a shack for, $300,000 in WA right now. But really a lot of properties are probably more than $500,000. I mean, that's a lot. So that's not something just anyone can afford. So how about if I were to tell you there is a way that you can be an owner of properties and like profitable properties with as little as $500. This is actually possible through another investment vehicle called REITs. So REIT stands for Real Estate Investment Trust. So essentially it's a company that's been formed, and it's a pool of your money if you invest in that REIT and everyone else's money in that particular REIT. And using that pool of money, they're able to buy even commercial property. So, shopping centers and so on and so forth. And so it allows the everyday average Joe, average Asia, to invest in sometimes even massive scale operations, because I'm just owning a small piece of it. And it is definitely possible as little as $500. Like, depends on the platform you're using, but there's a platform I'll be sharing a little bit later. So the minimum investment is $500. So yeah, if you've always been like, oh, I wish I had the money to own property. I believe in property. I feel like property is less risky than a business. Then this is actually how you can invest. So the last concept that I wanted to talk about is, we've talked about sort of shares and stocks and then dividends, which relates to that. So that's like part ownership in a company and the profits from that company. But there's something similar to REITs, but it's in relation to like business. And that is something, it's not just business actually, but it's something called ETFs. So ETF, it stands for exchange traded funds. So these are basically funds, which means a pool of money, and it trades on exchanges. So exchanges is just basically like a market where these where shares and stocks are being bought and sold. So the Australian share market, ASX, for example. But I'll be sharing with you a platform that I personally use. So this is another way, again, that you can invest in not just one business. That's a lot more risky, because if that business goes down because of something that happens in the world, then that's your money. That's your money potentially gone. But ETFs allows you to invest in like a whole pool of a type of investment. So for example, the ETF could be on Australian shares, but just specific to health. So this is a group of health related Australian shares. So that there could be an ETF on that. There could be just a broader ETF, which I'll be talking about a little bit later, especially for Muslim investors. Which actually I'll mention it now, because that actually would be a good segue into talking about halal investing. So there'll be ETFs that are halal ETFs or Sharia compliant ETFs. So that basically is, for example, all of the Australian stock market, and they've removed all the companies that don't align with Muslim or Islamic values. So that's an example of an ETF. So especially when you are a beginner, ETFs is the safer way to invest because you're reducing your risk immensely. You're not putting all your eggs in one basket, as they say. You're not chucking all your money into this one company that you're hoping and praying will be good forever. Your money is being split into maybe hundreds of companies. So if one falls, it's not a big deal because, it's this, 99 others that, your money is in. But also, if you're going to be investing directly in an individual stock or share, you absolutely must learn way more than what I'm sharing in this video. So I would say at the very least, you should be able to read a financial statement. So if you don't even know what I'm talking about, don't even go there. Because honestly, what I've learned the hard way is the quickest way to lose your money is to invest in something that you don't understand that someone might have recommended to you. So it doesn't matter if they're like an absolute expert, it may work out for you, but honestly, 9 times out of 10, it won't. So that is, that is just a quick intro into some concepts when it comes to investing. And now, obviously, there's a lot of new terms that I've introduced you to. So I don't expect you to remember any of these. I'm not going to test you. But what I recommend if you are serious about investing is, watch this video multiple times, because in my own experience, when you're exposed to the same term, 3, 4, 5 times, it starts to stick. You're like, oh yeah, I've heard of ETFs before. I know what that is. Whereas the very first time you're like, what the hell is that? This is like Chinese to me. But yeah, so that's important. So let's now talk about halal investing. So in my description, I'll be sharing, after I finish my live, I'll be sharing some resources of, things that I discuss in this video. So firstly, halal investing is essentially investing, but with some considerations that ultimately align with Islamic, and Muslim values. So I'm just going to share a example of, this is like a summary. Actually, no, that's the wrong one. Where are we? Yep. Okay, here we go. All right. So here, I don't know if you can see it. Okay. So this will be linked in the description below. So I just want to talk a little bit about what exactly is halal investing. How is it different to normal investing? So let's use the example of if you're an Australian, your superannuation fund. So if you're an American or elsewhere, that's basically your retirement fund. So in Australia, it's called super or superannuation. So might be worthwhile after this workshop to look at your superannuation fund. But typically a super fund, they will actually be investing your money for you. It might be in a mix of Australian shares. It might be a mix of international shares, which is considered more riskier. If you're living in Australia, it might be in property, might be in what they call bonds, which is, it's another kind of investment, which I won't get into. I don't want to overwhelm you, but it doesn't make as much of a return as the property and the others. So the thing is, some of these companies may not align with your values. So even whether you're a Muslim or not, for example, I think majority of people wouldn't agree with a company that invests in weapons, where weapons are being used to kill innocent people. So that's something that maybe a lot of people can agree on, that there's certain companies where morally I'm like, I don't like the idea that I own a piece of a company that is hurting someone, and I don't know who that someone is. Maybe they're actually innocent. So there are some super funds, or there are, retirement funds in Australia where they give you options. So they're conscious that, people are maybe, once upon a time, people just didn't really know much, but maybe now people are starting to talk about it a bit more. So retirement funds have started to create ethical funds where they might remove some of those companies. So it'll be everything in the Australian stock market, but the companies that fund weapons, that actually make weapons, we're going to remove that from this portfolio. And then there might be some others that you don't align with. For example, let's say you have family who really suffered from smoking, and so you don't agree with the idea of putting money into a company that's actually caused harm to your family. So again, these ethical funds, they may remove these companies from that fund. So I guess if you want to invest more consciously, you would at the very least look for a retirement fund that offers that option of removing and giving you ethical investing options or pools of money, which is what a fund is. So with Muslims, we have some extra, I guess, beliefs when it comes to, what is morally fine to invest in. So, for example, something that would still be in an ethical fund or in some of these retirement websites or fund websites is banks. But a Muslim wouldn't generally invest in a bank because they're heavily involved with interest. So they may, give loans and so on and so forth. So that's an example of, I guess, one aspect of halal investing is what they have written here. Halal investing seeks to eliminate certain investments, and they include bonds. So I mentioned earlier, bonds is a type of investment, but it's basically very interest-based. So it's like you put your pool of money. It's almost like, like a deposit. Put money into like your bank and it just earns you interest. So it's less risky, but it involves interest. So that's one thing that halal investing eliminates. Second is stocks of companies with high debt. So this is something that I actually didn't know, but this is something that I learned when I started to look more into halal investing. So why? Because it's risky. So let's just explain what this means. So Apple is an example of a company that has a lot of cash. So if they shut tomorrow, they would have so much money and sort of left over. They don't have any debt. Whereas there's like maybe, for example, there are mining companies because they spend so much on the actual process of mining and the equipment and so on and so forth for each sort of, excavation. So sometimes they actually have a high amount of debt. They've actually had to borrow lots of money, and they're using that to buy the equipment and to do the actual, digging and so forth, with the hope that they'll strike gold and that will cover those huge costs that they actually don't have. So obviously that's quite risky because if they don't find gold and you put money there, that's your money gone. So it seeks to eliminate things that are very high risk because ultimately it's to protect your wealth as a Muslim. So yeah. And then finally, as I mentioned at the very sort of start, is it seeks to eliminate securities of companies. So basically just means like, stocks or shares in companies that don't adhere to Islamic principles. So examples would be, I already talked about, weapons. We also don't really believe in alcohol, gambling, pornography. We already talked about banks because that is heavily involved with interest, pork, etc., etc. So that's one aspect of halal investing, is that. So if you were to try to do this yourself individually, as I mentioned earlier, you have to be able to read the financial statement. So you have to be able to open the company's profile, which is readily available like everywhere, like Yahoo Finance, MSN Money, Bloomberg. And then you have to be able to read the statement and check, do they have a lot of debt? Because that will be in that statement. What are they actually making? And obviously, what is the company actually involved in? So for example, the company might be a big company that owns other companies that you don't realize are involved in pornography. So for example, there might be a company that, it's kind of entertainment, and it's like, you're like, oh yeah, it's kind of just like TV shows, it's family shows. I don't think that's a big deal. And then you discover they actually also own, they also have smaller companies that, have pornography, which, morally as a Muslim can, affect families and that sort of thing. So that's why it's not easy to just be like, okay, I'm going to be able to do this now. I know what to do. I'm just going to look up, I'm going to read, make sure it's not this. But that's where ETFs are great. And I'll be talking about some towards the end of this video. So the next aspect of halal investing is, this is relating to sort of that risk aspect again, but it talks about eliminating companies that have a greater than 5% revenue in haram sources. So halal means permissible, and haram means prohibited, for those of my non-Muslim viewers. So you probably have heard the word halal in the context of food. So it means permissible food. So we're now talking about permissible investing, and companies. So if the company, so sometimes you get a company where they're mostly good, but they might have a small percent that does something that is against Muslims. So for example, it's a grocery store, but they sell alcohol, but in the grand scheme of things, the sale of alcohol is less than 5% of their general business. So then this would be considered okay. According to, so again, halal investing, it's a whole degree. So people who actually will filter through these companies actually will do a proper degree to really understand the ins and outs. So yeah, it just goes back to, it's not sort of for the everyday person. Unless you are serious about it, then you can study it for yourself. So the next aspect is, we talked about debt. So it can't have more than 33% debt when it comes to its whole sort of value. So that's really, really important. So again, that means you have to be able to read the company profile and find out what is its market capitalization, which is essentially kind of like what is sort of all the shares added together, the value, and its debt is at less than 33%. And finally, greater than 45%. If the company is, greater than 45% accounts receivable as compared to total assets. So what does that mean? So it's saying that almost half of it, or more than half of money, is owed to the company compared to what they already have. If they were to sell today, they'll be able to make money from. So it's a bit more complex, this one. So don't worry too much about fully understanding it, unless obviously you want to get into this some more. So that is essentially what halal investing is. And you can read more about this, obviously, in this website, which I will link after I finish this stream. So let's now talk about, so we've talked about, what is investing, some basic concepts. We now talked about what halal investing is, like sort of that filtering process of things that don't align with Islamic values. So let's now talk about another very important part of investing,